Good afternoon, everyone. Thanks for joining us again here at TradeLog. Today we're going to be talking about understanding option trading functions in TradeLog. Before we get started with our presentation here, again, we want to make sure and remind you that our legal friends ask us to remind you that the webinars that we present here are not financial, tax, or legal advice. So not all the information we present is appropriate for all people. We just want to make sure you understand that we are not responsible for your personal investing or reporting decisions. Now, some basics on webinars. If you've never attended one before, you'll notice on the right-hand side of your screen you do have some controls there. If you do have any questions during the course of the presentation, please submit those specifically in the questions box. I'll be covering questions during the course of this presentation specifically, as it is kind of an advanced webinar and dealing with some of the functions of TradeLog. So if you have some questions, feel free to submit those. I will stop and cover them. Otherwise, I will rediscuss and cover anything at the end of the presentation here. If you'd like me to, I'll re-demonstrate or cover any points again. Now, if you can't hear the audio or if my voice is patchy, cutting in or out, please feel free to call the phone conference system. You'll notice there is a phone number available there on the right, along with the PIN number. You can call into that system, and the audio should be a lot clearer. All right, my name is Caleb Huxter. I'll be again presenting the webinar to you today here. I am the TradeLog support team leader, and I'll be going through this presentation on understanding option trading functions. Now, as I mentioned, this is kind of a more advanced webinar here. We're going to be going through some of the harder functions in using TradeLog, not in the sense that it's hard to do really, but just kind of in understanding the correct way to do it. To get started off here, most people know that there are special IRS requirements for how options must be reported. But the fact is that most brokers do not report these things properly, that is, option expirations, and most brokers do not provide enough detail on how to properly exercise option trades and show the corresponding stock that should be going along with this assignment, and then making those necessary tax adjustments so that they can be reported properly to the IRS. So what we're going to do today is we're going to go through a couple things here. First, we're going to start off simple. We're going to take a look at an options record within TradeLog software and kind of get an idea of how they're laid out and the format that they need to be in. Then we're going to take a look at option exercise and assignments. I'm going to go through about three or four examples of different types of assignments. I'm going to do each of those and explain the process. Then I'm also going to show you how to do option expirations and how really easy that is in using our software. And then also we're going to discuss broad-based index options for those of you who trade any of those type of securities. I'll briefly touch on that towards the end of this presentation and show you how to set those up. And of course, if you have any questions, again, please submit those on the right-hand side of the screen in the questions box. I will be covering those again or towards the end of the presentation. Alright, so to get started here, let's first off take a look at an option record. What you're looking at here is the basic options format. We call it the options long format here. And it consists of, first off here, you see the ticker symbol. Then we have the expiration information, which is date, month, and year of the expiration of that option. Then we also have the strike price, and then whether it was a call or a put. So all options in TradeLog got to be laid out in this format, and this is necessary for proper formatting. Now, brokers are all slightly different, so we have this standardized format that we import options and convert them into this format, so that way we can easily access in terms of exercise and assignments or expirations. Okay. Now, again, when you're manually importing trades, you want to make sure that you do have the options in this format, but when they are coming in from the importing process, they will automatically be converted to this, so you don't have to be too worried about it. Okay. What I'm going to do here real quickly is just show you a couple examples in my data file that I have here today. This is our sample file that we're going to be working with. You can see here a couple examples. You're probably familiar with this. You can see here GM 16 April 11 34 put. All right, some puts, some calls. We have some shorts here, so on and so forth. So these are the format in which these options need to be laid out. Futures are very similar as well. These here are considered broad-based index options or futures. So you can see here they're laid out very similar to the same as an option. Okay, so let's talk a little bit about the process of exercise and assignments before I actually go ahead and show you some examples. Most people don't know that there's specific IRS rules for how how exercised options must be reported. The option position itself, once exercised and assigned, does not get reported as a gain or loss under Schedule D. Rather, the resulting gain or loss from the exercise is adjusted into the stock position. Okay, so when there is an exercise and assignment, the cost basis or proceeds from that option are being moved into that stock position. So the gain or loss from the option is not reported on the option itself, but now on the stock position where that cost basis has been moved to. Now, the transaction history that we see coming from brokers oftentimes does not contain enough details to identify specifically which stock should be matching with which option and the quantity, how many contracts corresponding with how many shares, which specific lot should be matching. Okay, so a lot of times the brokers does not have enough information for us to be able to identify that. Thankfully, though, TradeLog has this function here, this exercise and assignment function, to allow us to properly adjust those positions that have been affected by an assignment so that they can be appropriately reported to the IRS. All we have to do is identify those positions, select them, and generate or initiate the exercise assigned process, and TradeLog will do all the calculations for us. So let's go ahead and jump into TradeLog here. This is going to be a couple minutes. We're going to go through about 3 or 4 different types of exercise and assignments. I'm going to go through each of them at a good pace here or slowly so that way you can follow along with me. All right, so the first one we're going to do here is on GM. Now, what I like to do when it comes to doing exercise and assignments is isolate only the affected trades so that way I don't get confused by looking at other transactions. So I've already taken the time here to do the legwork, figure out what options were exercised and assigned, and that way I could have my list, and all I have to do is actually do that in the file. If you do contact us for support, obviously we're going to need you to do the same thing, find those positions that are going to need exercise and assign, and then we'll be glad to help you, figure out the process, but you will have to notify us what positions there are. Okay, so I've identified those positions. So what I'm going to do first here is isolate those positions. I'm going to click on the Find button, and the drop-down I'm going to click on Ticker. Okay, here I'm going to type in GM, which is my first position. To isolate options, you need to make sure to add an asterisk mark in here. So you can see I put in GM asterisk, which is Shift-8 on your keyboard. I'll press OK. TradeLog's going to isolate out that position. The first type of assignment here we're going to do is an open long put, or I bought a put in this example here. Now, when an open long put contract, depending on how many contracts it is, doesn't matter, when an open long put gets exercised and assigned, the result is the stock is going to be sold from my account or put to somebody else in a sense. So I have bought a put here, and as a result of the assignment, stock is being moved away from my account at the strike price. So what we need to do is do a little identification here. If we take a look here, this is the put that I know has gotten assigned. Notice the strike price is 34. Okay? It is also 2 contracts, and we know that options have a multiplier of 100. So what I'm roundabout looking for is a position that was sold at my account at $34 of 2 contracts or 200 shares. Now this is a pretty simple example. I'll try to keep it as simple as possible so I could show you really easily. In a larger file, it might take you a little bit more time to identify those. But here's my record that I need right here. Okay, it matches all my criteria. It's a position that's being sold from my account. It's 200 shares. The strike price, or the price of this here, is matching the strike price of my option at 34. All right. So what we need to do is make the adjustment so this amount here, this $236.95, is moved away from this option into the stock. So in order to do this, what we do here is we have to highlight both positions. First off, we're going to select our option position. It's going to be highlighted here. To highlight multiple items in Microsoft, we press and hold the Control key and click on my second item. Now I've highlighted both of these positions and they're ready to be linked together. To initiate the exercise assignment process, what I need to do is click on Edit, and in the drop-down, Exercise and Assign. TradeLog is going to ask me, this is what I would like to do. Do I want to bind these two together? I'll say yes. Save a total of 27 records, and it's all set. So let's take a look at what happened here. First off, notice in the far right-hand column, we have now a matched tax lots column. We have a couple little figures here, EX-1. And basically what this is showing me is the three positions that are matched together. Now what happens in the event of an exercise and assignment, and we do it in the file here, notice what TradeLog has done here is place the word exercised next to this option. It's also created a offsetting or closing position on the date of the assignment for the amount here. Notice here we have a negative 236.95 and a positive 236.95. That cancels each other out. That money has now been moved into this stock position. Remember before the price was $34. It's now $32.81.525. That cost basis has been lowered here in a sense, I guess you could say, by this amount here, or reduced. Alright, so this has been properly assigned. It's now generated a P&L for me here that was different than what was showing before. So we can go ahead and say that this option is all set and properly assigned. Okay, so let's move on to our next example here. To do that, we'll click on the All button. It's going to bring us back to the main grid. The next one we're going to take a look at is an open short put. This one here again, let's do our ticker find to isolate that position. Click on Find, Ticker. I'm going to type in HD. Don't forget that asterisk mark. Press OK. Alright, so now in the case of an open short put where I sold the put, in the result of an exercise and assignment, what's going to happen is the stock is going to be put to me, or I'm going to be buying the stock in my account at that strike price. So again, we got a list of criteria here. We're looking for me buying stock at a 31 price, 4 contracts, 400 shares. Okay, so what I see right here, again, keeping it simple, the next record down shows me this. I have 400 shares. It is a buy. It matches my strike price, so I can assume this is the proper one that should be assigned with this here. You can see here later on, I did, as after receiving that stock, I just sold it right away here a couple days later. Okay, so again, to do our exercise assignment process, we have to highlight the affected items. So the first thing we're going to do is highlight our option. Next, we're going to highlight the stock that's corresponding with it. Once both of these are highlighted, I'm going to click on Edit, Exercise Assign, say yes, this is what I'd like to do, save the records, and I'm all set. Now again, these are specific examples that I'm providing here, but the general process or procedure is the same for every option. If you contact us for support, we're going to go through the same process with you because that's what's used to properly assign these. So let's go ahead and kind of take a look at this and break it down to what happened. I had an open short put, so as a result of it being exercised, the stock I had to purchase at that strike price. The strike price was $31, or the price of this was $31, but has now been adjusted or reduced down to $29.50. Notice here we have a positive $596.75 and then a negative $596.75. Those two are offsetting each other. That has been moved into this position here, reducing the cost basis, and so now the option has been properly exercised and assigned. Okay, so let's go ahead and move on to our next example here. The next one we're going to take a look at here is WMT. So let's go ahead and do our find again. Find ticker, put in WMT. Don't forget the asterisk, press enter. Okay, this example here is an open long call. Now in the event of where a call has been exercised and assigned, and if it's long, where you actually purchased those contracts, what's going to happen as a result is you're going to be purchasing the stock to your account. Okay, so in this case here, let's go ahead and take a look at this example. All right, so let's take a look at our criteria again. We have a 52.50 call, 1 contract, so we're looking for 100 shares. Now the scenario here is a little bit different because what I had here initially was an open short. So purchasing the stock was actually a purchase to cover, but nonetheless still a purchase. So it still matches our criteria. The strike price is right, 52.50. We have one contract, 100 shares. Everything matches up correctly. So it doesn't necessarily have to be the same letters here in the OC and LS column for it to match. A closed short or a buy to cover still qualifies as a purchase, and again matches what we need for this exercise and assignment. So we're going to go ahead and highlight both our positions here, have the option highlighted and the stock highlighted. We'll go ahead and click on Edit, Exercise and Assign, and say yes, this is what I want to do. Save the records. Alright, so now that we've done and taken care of that one, let's break it down again here. TradeLog has created a closing position for us at the strike price, or I'm sorry, has created a closing position zeroing out the money or the cost basis here, a negative 175.95, a positive 175.95. We can see they have been matched by looking at the match tax lots column here. They've been assigned EX-3. TradeLog in this case here has increased the cost basis. Notice this time it went from 52.50 up to 54.25. Okay, the resulting profit and loss has been generated, and so this option again is successfully exercised and assigned. Okay, click on the All button to get back to the main grid. We have another example or two here. Let's go ahead and move right along to the next one. Going to click on Find, click on Ticker. Next one we're going to do is NUE. Again, put the asterisk mark in there, press OK. Alright, so we have these positions isolated. In this case here, we have an open short or a sell to open. So I am the writer of these call contracts. When an open short gets exercised or assigned, what's going to happen here, in this case it's a call, the resulting action is stock is going to be sold from my account at the strike price. Okay, so when I am the writer of contracts, or call contracts in this case, the exercise and assignment is going to be selling stock from my account. So we can see here, again looking for my criteria, I have a 47 strike price, 7 contracts with a multiplier of 100, so I'm looking for around 700 contracts. Okay, and I'm looking for a sell. So this position matches all of those examples there. It's a closed position, 700 shares at a price of 47. So this matches here. So what I'm going to do is go ahead and highlight my other position here, the other affected party, this option position. I'm going to click on Edit, Exercise and Assign. Press Yes, this is what I want to do. Okay, save a total of 30 records. We'll say Yes. Okay, so this one's all set to go here as well. You can see here TradeLog created a buy to cover position for this on the date of the assignment. For same amount, 7 contracts with the adjusted cost basis here. You can see 1,028.45 negative, 1,028.45 positive. We look down here to the matching trade. I can figure that out by looking here, seeing the EX-4. The cost basis has now been increased in this case, up from 47 up to 48.46, and my amount cost basis is now from 32,000 around that to 33,928.45, and has generated a new profit and loss for me. Okay, so there's a couple examples there. I'm going to go ahead and hit the All button. Now this last example here, bear with me for a second, it's a little more complicated. In this case here, we had a partial expiration, or a partial assignment and partial expiration. So what we have to do in this case is actually break up the shares. And a lot of people will contact us for support in this type of scenario. So I figured it would be really good to give you an example of this today and show you the proper way to do it. There are a couple steps to it, so you might have to rewind this in this archived webinar here, but I will recover it if you'd like me to at the end. I'll try to go through it slowly. So let's go ahead and isolate the position here. We're going to go to Find, Ticker. Security is WLP. Put in the asterisks. Okay, so what we have here is a open long put. Let me just make sure I got my facts straight here. Yeah, we're at open long put, the 6250 put, all right? 10 contracts. So we did an example of an open long put already. It was the first one that we did. So in the case of an exercise and assignment on an open long put, what I'm going to be doing is selling the stock from my account. Okay, I'm the holder of this, so when this happens, stock is going to be sold from my account. So if we look, you can tell right away here, again, looking for our specific points or our criteria, we see is a 6250 put. Again, I know the stock's going to be sold from my account, so I'm looking for 10 contracts or 1,000 shares. So when I look through here, I can see that this one partially matches what I'm looking for. 6250, stock being sold, but the problem is it's only 600 shares. So 10, or 6 I should say, of those 10 were exercised and assigned. The remaining 4 will probably got expired. So what we need to do here is break up this initial options position. So I'm going to take a minute here and show you how to do that. First thing we need to do is add a record. So I'm going to go ahead and click on Add Record. Okay, TradeLog might put some information in this line. I'm going to ignore that. I'm just going to fill out what I need. So what I need to do is break this 10 into 2 pieces, 6 and 4, and then divide up the commission accordingly. So what I'm going to do here is match majority of this information. You can see here. So I'm going. Whoop, that was bad. Let me just go ahead and isolate that again. Okay, I'm going to add back my record. All right. So first thing I'm going to do is add in the date, which is going to be 1/6/2011. Okay, it's got to be an open long. I'm just matching this line right here, open long. This options ticker that is in here is from the other one, so I'm just going to change that out to what it needs to be. Put in 19 March 11 6250 put. Okay, so I've matched that. The contract amount, again, like I said, we need to split this up into 2 cases here, or 2 records. So I'm going to make this one the 6. Or actually, I'll just do the 4 here. Put my price in, same price, $1.55. You can leave this as an option. Now for the commission, I actually need to divide this out to figure out what the commission would be. So I'll break out my calculator here. I'll take the total amount, $7.95. I'm going to divide it into 10 parts. And then I'm going to multiply it by how many contracts I have here, which is 4. Okay, so 4 parts of that $7.95 comes out at $3.18. So I'll plug that in here. Okay, so I filled out this line. I'm going to go ahead and save it. Enter, enter. Save the record, yes. Enter another transaction, no. Okay, so now what I have is actually too many contracts. You can see here I have 14 open. So now that I've entered one of the records, I need to adjust the original one so that I still only have 10 contracts. Cost basis is still going to be the same, meaning the amount of money that I have tied up in this position is not going to change. I'm just breaking it up into separate lots or separate records. Okay, so I'm going to take this here. I'm going to go right-click on the first record of 10 and click on Edit Selected Record. All I need to change in here is the commission and the contracts. I've already got 4, 6 of which are going to be exercised and assigned, so I'm going to put 6 in here. Leave the price the same. For the commission, let's go ahead and get the calculator again here. I just need to do a little subtraction. So I'm going to take the total amount, $7.95, and subtract the $3.18, which is the commission that I put in for the other one. I know the remainder amount is $4.77. So I'm going to adjust this $7.95 to $4.77. Once I put that information in, enter, enter, and save those records. Okay, so now I'm all set to go. So now I can go ahead and perform my exercise and assignment. So what I need to do here, again, is select the affected parties. I'll go ahead and select the option here, this line. Well, first thing I just forgot to mention here, what we need to do is separate out these positions so that we know that they are not going to try to exercise the wrong option. So what we need to do here is highlight this line item. Once it's highlighted, we're going to click on Edit, Match Tax Lots. Okay, TradeLog is going to assign a number to that position there, so that way it'll ignore it and only focus on the options contracts that I want it to see, which is these 6. So I'll go ahead and click on these 6 here. Again, click on the closing transactions, which are 600 contracts at 62.50. Go ahead and hit on Edit, Exercise and Assign. Say yes, this is what I'd like to do, and save the records. Okay, so we can see here TradeLog has now properly done that. So let me just cover my steps here, what I did, just briefly. I know I went kind of quickly through that, but let me just try to recover my steps. First thing we did was we found out that we have 10 contracts, 6 of which got assigned. The remaining 4 are going to be expired. So what we had to do was split that 10 up into 2 parts, 6 and 4, so I could only exercise just 6. So the way we did that is we added a record, breaking that 10 down to 6 and 4. Added a record in, pick one or the other, doesn't matter. Add the record for the 6 contracts or the 4. Put that amount in, divide up the commission so that way it's a proper amount. And then we adjusted the original open position of 10 down to 6 and adjusted that commission as well. So basically all we did, really simply put, is take that 10, make it 6 and 4. Then what I did was selected the 6. Oh, I'm sorry, first off, I had to make sure to show TradeLog here. You can see again, I matched this tax lot so that way that TradeLog will ignore this position. And then I did my exercise and assignment like we did at the beginning of this presentation with the 6 and matched everything properly up. Okay, so again, we can see here in this options position, since it's been exercised and assigned, we have a positive or a negative 934.77, a positive 934.77. That money has now been moved into here. The cost basis has been reduced from 62.50 down to 60.94. Cost basis has changed here, you can see, and a resulting profit and loss has been generated. So that's a pretty complicated scenario there. We don't see it too often. It does happen though, so we want to make sure we have some documentation here so that you know how to properly take care of a scenario like that. If you do get stuck, and there's some situations that can get a little more complicated even than that, feel free to give us a call. We'll be happy to provide you with specific instruction for your file. All right, so now we've covered those here. Let's go ahead and go back into our presentation. The next thing we're going to talk about is option expirations. Now, brokerage reporting of option expirations is really what we find is inconsistent or non-existent. Some brokers will provide expirations. We have just a handful that will show that. Majority of them don't. Now, some people aren't aware of this, and it's pretty simple, honestly, but all stock options have an expiration date. They have to have a date at some point at which they're going to expire. Either the option is going to generate a capital gain or a loss depending on the direction of that trade, if it's a short or a long. Now, all expired options must have a matching closing transaction. Okay, so any option position that you have in a file is going to be either it's going to be sold, buy to cover, it's either going to be exercised or assigned, or it's going to be expired at a 0 price. So there's a couple different ways that options get closed out, but it's got to be one of the 4 there. Sold, bought to cover, exercised or assigned, or expired. One of those types is going to apply to an option. Okay. Now, the IRS, one thing we do want to make note of here is the IRS says that the trader should record the word expired in column D of the Schedule D. Now, we don't put this here in TradeLog because it involves placing a text or text that is in a numbered field. We do, however, record the word expired in column A. We've never had any trouble with this. The IRS has never rejected any of our returns, but we just want to make a note about that, at least mention it to you. We do record the word expired on the Schedule D still. All right, so what I'm going to do next here is I'm going to go back into TradeLog, and I'm going to go through showing you how to expire your options. Now, it may not seem like it, but I am doing this in a specific procedure. When you have options, you need to take care of all your assignments and exercise and assignments first, and then take care of your expirations afterwards. The reason being is because the way the expiration process works is it's going to go through the whole file. We don't have you select specific records, say I want to expire this one or expire that one. You actually set a date, and TradeLog is going to expire everything from the beginning of the file to that date that you set. So that's why we do our assignments first, and then let TradeLog expire the remaining options. All right, so in order to do this, we're going to click on the Open button here in the top left. TradeLog is going to pop up with a box here showing all the positions I have open in this file. Now this is a 2011 file, so if I take a look here, just for a quick reference, I can see there's an April 11, a June 12, so that one's not going to get expired, March 11, and an August 11. So I have about 3 different option positions here that are going to be taken care of by this expire options function. So in order to do this, what we do is click on Expire Options right here. Again, we're going to set a date range. We can leave it as whatever date that it comes up with here. The last date for an option was on 6/27. That's what's showing here, so I'm going to go ahead and leave that. I'll press OK. Okay, so what TradeLog did here, I'll go ahead and show you in a second. What TradeLog did here was actually create a closing position for those at a 0 price. Notice here this position was expired. It creates a closing position on the expiration date, April 16th, 2011. You can see that date's the 3rd Friday of that month. TradeLogs create the closing position, 3 contracts, 0 price, and that generates a P&L for me. Those positions will now match up as showing not open at year end when I try to reconcile with my brokerage statement, and also the amount in terms of my P&L will be correct at year end as well. So a pretty quick and simple function to use. TradeLog's going to go through and do the work for you. It's going to close out those options positions. All right, so let's go ahead and go back to our presentation here again. Next thing we're going to take a look at is broad-based index options. Now we don't get too many support requests for these, but there are enough that we figure to be important to cover in this presentation. One thing we want to first off note is that broad-based index options do not get reported on the Schedule D. Okay? Again, broad-based index options do not go on the D. The reason for this is because they are not directly or indirectly related to a specific stock. They actually fall under what's called Section 1256 contracts and follow the guidelines much like that of a future. Any gain or loss that you have on a broad-based index option is going to be, from the sale of these, are going to be subject to the 60-40 rule. 60% of the gains or losses are going to long-term and 40% to short-term. Now, all of these, what are considered Section 1256 contracts, get reported on, you can see here what's called IRS Form 6781. Okay? So again, broad-based index options do not go on the D. They fall into the category of Section 1256 contracts and go on IRS Form 6781. If you want to, you can do some reading. We have some tax topics that talk really about this and exactly what you need to do, and some links to these actual forms on our home page under the tax topics menu item at the top. So take a look at that if you have some time. Now, TradeLog will identify these broad-based index options. We do have a built-in list to show these positions here. This list is customizable, and the reason being for this is because opinions do vary or differ from time to time on which securities should be classified as a broad-based index option. We did generate our list, our default list that is in the software from a respected source, but we do recommend when it comes to this, if you do have any questions, please consult your tax advisor or CPA. They may say that this should not be a broad-based index option or should be, and that's why we allow you to customize that list in TradeLog. Broad-based index options are going to show up as an FUT in TradeLog, which is standing for future, and really the reason being is because, again, they fall under the same criteria or rules of how futures are being reported. All right, so I'm going to go ahead and show you a couple examples of some broad-based index options here. You can see here I have some RUT and SPY. These are being shown here again, as mentioned, with a multiplier and the FUT for the type of security. Now, if I want to isolate out these positions here, I can go ahead and click on Edit, or excuse me, Find, and Futures. All right, TradeLog is going to isolate out those positions for me, and so I can run reports for them. But I'm going to show you how to run the report in just a second here. Let's go ahead and go back to the home screen. What I want to show you is where you can adjust that list of broad-based index options. To do this, we're going to go to Options. We're going to go to Global Options, and then to Broad-Based Index Options. Again, here is that built-in list that I was talking about that we have developed, and we've got most of our information from respectable sources. So you can adjust this list. You can put in the symbol, put in the multiplier, and add that to the list. Or if you'd like to adjust one that we have, if you have a different multiplier, you can simply click on it, remove it from the list, and then re-add it with the corresponding information that you'd like to have. Anytime that you maybe make a mistake, you can just click on Restore Defaults, and the TradeLog will go back to the default list that we have generated here. Okay, so a pretty simple way to be able to adjust those multipliers for those positions. Now, again, as we mentioned in the presentation, these positions do not get reported on the Schedule D. So to do this here, we need to generate a report that's going to show that they are separate. So we're going to click on Reports, Gains and Losses Tax Forms. And what I'm going to do here is leave it at Gains and Losses. That's fine. And I'm going to change this to Futures. Notice how the grid quickly isolated out just those positions. And now I can go ahead and run my report and view those positions just themselves and not have to have my other stock and option positions that do go on the D included in here. I can then take this figure, this gains and loss figure, go to my Form 6781 and perform that 60-40 split. The instructions for those calculations will be on that IRS form when you actually do your tax filing. Or if you've got a CPA, just hand him over this number, tell him this is your gain and loss, and he'll make that breakdown for you. There's no IRS requirement for a breakdown of these actual positions here one by one. So all you have to do is give your CPA this total P&L number, and he'll perform that split. Alrighty. Well, hopefully, I know we went through things somewhat quickly here today. I tried to take my time, though, but hopefully I was able to give you a better understanding of how TradeLog is really aiming to help you with these type of functions in terms of properly adjusting your cost basis on options and stocks in the case of an exercise or assignment, also properly reporting expired options, and how you can use this and file your Schedule D very accurately. And remember, again, this is for all of your trades and all of your brokers. For however many that you have, we can handle all of those across multiple accounts. We can take care of that here. Again, also, you might want to take a look at some of our other presentations talking about some of the powerful accounting and analysis tools that TradeLog has to offer. One thing we do want to mention here, we try to tell this to all of our users, try to import your data more often than just at the end of the year when tax time comes around. It's going to save you a lot of time because things really tend to pile up if you leave that. So we recommend at a bare minimum we're importing once a month, and even more often to that if you're a heavy trader, anything above 10,000 trades a year. It'd be really good for you to import at least on a weekly basis, we'd recommend. Now, if you do have any questions or you get stuck on something, or even in reference to this webinar here, feel free to contact us at TradeLog. We do have a full-time support staff available for your help. We can go through and help you with any procedures in our TradeLog Quick Start Guide or our user guide if you're having trouble with some of the functions. You can contact us by phone. We do have a 800 number. We are based solely out of the U.S., and you can contact us. We are on the East Coast, open from 8 a.m. till 5 p.m. currently. You can also always submit us an online support request. I'll show you that here in the software. If you go under Help, you can always click on Send Files to Support. TradeLog will generate a message here. You can give us a brief description of the problem that you're having, and it will attach your data file. You can send that along. We'll take a look at it and get back to you within 1 hour via email. We also have some great self-paced tutorials here. If you go under Help and Tutorial, this is going to take us to our home web page. Okay, you can see here, this is based off of our Quick Start Guide, but there actually is a one here talking about, let's find it, there it is, talking about exercise and assignment of options. It's going to be a little more quicker than this one here, with probably only 1 or 2 examples, but again, if you want some more information on it, you can certainly watch that video. This is going to walk you through the 8-step process of using TradeLog and the proper order in which it needs to be done. So plenty of ways to get help from us. We try to provide as much information for our customers as possible. All right. At this time, I'll go ahead and discuss any questions. For those of you who have to leave right away, we want to thank you for spending some time with us again this afternoon. We hope you enjoyed the presentation and it was able to enlighten you a little bit more on how to work with exercise and assignments. I hope you have a great afternoon and the rest of the week, and we'll talk to you soon.